Hello, and welcome back to Explain the Charts, your channel for in-depth technical and fundamental analysis. Today is October 14th, 2025, and we are taking a close look at the US dollar versus the Japanese yen, or USDJPY. This pair has seen some incredible volatility recently, and there are a lot of moving parts both in the news and on the charts that we need to unpack. First, let's talk about the fundamental drivers, because the news has been a huge factor lately. The biggest story is the political uncertainty brewing in Japan. The Komeito party has decided to leave the ruling coalition with the LDP, which throws the government's stability into question. This is compounded by the LDP's new leader, Sanai Takaichi, who is known for supporting an ultra-loose monetary policy. This political chaos and the prospect of continued monetary easing from the Bank of Japan are putting significant downward pressure on the yen, which is why we've seen USDJPY push to multi-month highs. This creates a major policy divergence with the US, where the Federal Reserve is still navigating inflation and labor market data to decide on its own interest rate path. Markets are also keeping a close eye on the potential reopening of the U.S. government today, as an extended shutdown could delay crucial economic data. There is also the ever-present threat of intervention from the Japanese Ministry of Finance. Officials have warned against excessive and disorderly movements, and some analysts are flagging the 160 level as a potential line in the sand for direct intervention. So with that backdrop of a weak yen fundamentally, but with intervention risks, let's turn to the charts to see how this is all playing out. Looking at the daily chart, the long-term picture for USDJPY has been overwhelmingly bullish. We can see a powerful uptrend that has been in place for well over a year, characterized by a series of higher highs and higher lows. The price successfully broke above the major psychological barrier of 150 back in late September, a level that had been a focus for a long time. This breakout led to a rapid surge, culminating in a fresh 8-month high right around 153.27 on October 9th. However, this is where the story gets interesting and correlates directly with the news. On October 10th, we saw a massive bearish candle, wiping out several days of gains with a drop of over 1.2%. This sharp reversal coincided perfectly with the news of the Japanese ruling coalition breaking up, injecting fear and uncertainty into the market. Since that dramatic drop, the price has been consolidating, trading in a tighter range as the market digests the news. The price bounced off a low near 151.10, showing that buyers are still present, but sellers have also stepped in to defend higher levels. Let's zoom in on this recent action by filtering our daily chart to show everything from September 1st of this year. Here you can see the powerful, multi-week rally that broke through the 150 resistance level. Notice the strong, consecutive bullish candles in early October. That's the market pricing in continued BOJ easing under the new leadership. Then, we have that huge red candle on October 10th, which represents a significant rejection from the highs. Yesterday, on October 13th, the candle was a doji, indicating indecision as both bulls and bears fought for control without a clear winner. This indecision sets us up for a potentially explosive move once price breaks out of this new, smaller consolidation range. The key battleground is now established between the October 10th low and the highs from yesterday. Now, let's switch to the 1-hour chart to get a more granular view of this battle. Here we can clearly see the peak at 153.27 and the subsequent cliff-like drop to the 151.10 level. After that low was established, the price attempted a recovery. This is where the level mentioned in the news reports becomes critical. Analysts highlighted 152.35 as a key level of previous support that may now act as resistance. And as we can see right here on October 13th, the price rallied up to that exact area and was rejected, failing to hold any gains above it. This confirms that sellers are actively defending the 152.35 to 152.45 zone. On the downside, the intraday low from yesterday around 151.70 is now acting as immediate support. We are currently caught in a range between roughly 151.70 and 152.45. A break of this short-term range will likely signal the next directional move. To see the tick-by-tick struggle, we can even drop down to the 15-minute chart from yesterday's session. Throughout the European and early US sessions, you can observe multiple attempts to push above 152.35, each one met with selling pressure that pushed the price back down. This repeated failure to break higher on the lower timeframes reinforces the strength of this resistance level. For intraday traders, this kind of price action offers clear, defined risk levels for short-term trades. It shows a market in equilibrium, waiting for a new catalyst to force a breakout. So, let's go back to the daily chart and recap what we're looking at for the short and long term. Your key resistance levels to watch are, first, the immediate zone at 152.35 to 152.45. A decisive break and hold above that brings the recent high of 153.27 back into play. If the bullish momentum really takes over, the next major target could be the psychological 155 level. On the support side, the immediate floor is yesterday's low around 151.70. The most critical short-term support, however, is the October 10th low at 151.10. A break below that would be a very bearish signal, likely opening the door for a retest of the major psychological support at 150.00. So, what is the likely path from here? The bullish scenario remains slightly more probable, I'd say about 60% likely, simply because the underlying fundamental driver is the strong policy divergence between the US and Japan. For this to play out, we would need to see price break and close above 152.45, ideally reinforced by continued dovish talk from the BOJ or strong US economic data. The bearish scenario, which I place at a 40% probability, would gain significant traction if we see a break below 151.10. This could be triggered by a surprise resolution to the political chaos in Japan that strengthens the yen, or very weak US data that signals the Fed might have to cut rates more aggressively than expected. Keep an eye out for Japanese machinery orders data on October 16th and any speeches from BOJ Governor Ueda, as these are known market movers. Ultimately, the market is coiled for its next move, and a breakout from the 151.10 to 152.45 range will likely dictate the direction for the coming days. And that's our analysis of USDJPY. Please remember, this is not financial advice. This video is for educational and informational purposes only. Always conduct your own research and due diligence before making any investment decisions.